Cam for Cam's Mortgage Minute on Friday, November 23rd. Hey, just interesting numbers came out of CAMP. That's the Canadian Association of Accredited Mortgage Professionals. And what it's saying is that more and more Canadians are opting for fixed rate mortgages. The variable rates mortgages are just not as exciting, as enticing. Well, really, they're not as sexy as they once were. And they found that 79% of mortgages taken out this year were fixed rate terms, 10% were variable, and 11% are a combination. Now, fixed rate mortgages generally only used to account for about almost 2/3 of the market, while the variables and the combinations made up the rest. Canadians, I think, are typically locking in simply because, let's face it, the variable rates just are not good. The spread is very little. We're finding very little spread between the fixed and the variable side. And when it's like that, it absolutely makes no sense to take the variable because the risk quotient is higher. Plus, also, another thing that got instituted this year was that the federal government, under the mortgage changes that they made, now have it mandated that if you're taking a term of less than 5 years, that you have to qualify on the Bank of Canada posted rate. So if you want a variable mortgage or you want a mortgage term shorter than 5 years, that's what you have to qualify on, and that's it's basically 5.25%. So that makes it pretty tough for qualifying. So more and more Canadians are definitely being steered towards going with the fixed side of things, because let's face it, when fixed rates are hovering around 3 and you have to qualify on 5, for a mortgage with very little difference, why would you do it? Now, the other interesting numbers were that the average mortgage interest rate for homeowners fell from 3.55%, basically an average, fell to 3.55% from 3.94% a year ago. And for homes bought this year, the average rate's been around 3.26%. Again, record lows that we haven't seen in 50, 60 years. Now, this report was based largely on an online survey of 2018 Canadians by Moritz, and they do the surveys for them. And some other interesting numbers that came out of this was that 6% of homeowners took equity out of their homes in the past year. Now, the government's always saying, hey, everybody's taking equity, but only 6%. And the average was estimated around $49,000. Basically, that amounts to $30 billion of equity taken out during the year. Now, that might sound like a really big number, but when you take the overall mortgage market, it's not that big. 87% of Canadians, however, have at least 25% of equity in their homes. 16% of mortgage holders have increased their payments, and 15% have made lump sum payments throughout the year, and 6% have increased their payment frequency. As I reported the other day, Canadians are doing a good job with paying down their mortgages. So they are, again, a lot of Canadians, as I mentioned yesterday, have paid it off in advance of the term even expiring. So these are certainly positive numbers from that point of view. Rates, as I said, are record lows. They're just insanely low. So if you do need a mortgage, you need anything like that, let us know. We're here to help. It's Cam the Mortgage Man, and the Auxilium team. We're always here to assist you. Anyway, enjoy your weekend. Take care, and I will see you on Monday.